is the stock that we were speaking about in just a bit. Interarch Building Products is the latest listing on the exchanges, a 1299 rupee a share listing, which was a 44% premium to its issue price of 900 rupees a share. We are now joined by Gautam Suri, who is the director, and Manish Kumar Garg, who is the CEO of the company, to discuss the outlook going ahead. And now, gentlemen, good morning. Thank you so much for joining in. Firstly, congratulations on being a listed company now. It's a big day for you guys and the team as well. We start off with numbers straight away. Since now you are a public company, you can definitely share some numbers. What is the growth that you are penciling in for FY25 when it comes to the top line? And we'll start off with that and then move to the margin front as well.
Let Manish answer that.
So good morning and thank you very much. In last 3 years, you have seen the numbers. We grew at a CAGR of over 20%. Our order book is strong. So the outlook definitely is very positive, and we are doing good.
All right. Good morning, Mr. Suri, as Mr. Garg. I saw you all ringing the opening bell, and you could see the kind of passion that you all have built this company. And now you welcome to the bosses as well, and we look forward to chatting up with you from here on. Now, as you said, Manish, you all have been growing at a rate of close to around 20%, and you believe you can grow from here on as well. So give us a few details. This year, if I go by that 20% run rate, you should at least end in that vicinity of around 1,600 crores of revenues. Could you confirm that? What would margins look like? And also, if you could split the top line mix as of now. As of now, I'm looking at it, pre-engineering building contracts is close to around 75-76% of the mix. How do you see the mix turning going ahead?
Yeah, so the mix is going to be pretty much the same. Pre-engineered building remains our main product line, and that is what is going to remain the main product line. Now, as far as the growth numbers are concerned, our order book is very strong. There is momentum in the market given the macroeconomic factors and the private capex, which really we represent as a proxy. So I'm sure things externally looks very bright. Our order book is pretty strong. You saw that in RHP, it was 1150 crores at that time. It keeps growing all the time. And if past is, any reflection of how good we have built the company for a sustained performance, I'm sure the performance would be much better than what it has been, at least sustainable. So Manish, that's the kind of growth we are looking at. We will keep working very hard.
Manish, I'm going to push you for a couple of numbers. Since you're listed now, there's no problem. The regulator,
yes,
with regard to your bankers, promoter, everyone's going to be okay if you share some guidance. So for this year, 1,600 crores, is it doable? And in the following year, you'll be closer in that vicinity of around 1,900 to 2,000 crores. Going purely arithmetically, what it means for margins as well?
Yeah, I would say we have the right ingredients and the recipe to deliver those kind of numbers. I think that is what I can say. And we will sincerely work very hard to push and give those kind of numbers. Of course, a lot depends on how we get there as we go forward. But yes, all the ingredients are there. The recipe is there for those numbers to be delivered. And as far as the margins are concerned, we are very conscious of the margins sustainability. And we work on internal as well as external factors to sustain the kind of margins we have delivered over the last 2 years in particular.
We'll take that as a yes then, as the answer to our question, Manish. But in terms of utilizations as well, right, you currently have 4 manufacturing units as we speak. What are the utilization levels in each of them? And if you can also tell us that by the end of FY25, where do you plan on having your capacity at, which is currently at around 1.4 lakh MT, if I'm correct?
That is correct. So that answer, of course, I have. So our capacity utilization for what we call the utilizable capacity is about 80 to 82%. We already declared that our Andhra Pradesh phase 1 is the new capacity coming in, which has been funded all through internal accruals. And we are very shortly going to be starting our other plants also, so which are part of the objects to the offer. So yes, there will be capacity addition in FY25 as far as our new plant is concerned, which is the AP1, which is already declared. So the capacities are going to go up in FY25 and go further up as specified in FY26 as well.
By how much would that be, Manish, if you can share a number on that as well?
So I think AP1 is about 20,000 tons, and AP2, which is part of the objects to the offer, as I said, for which we have raised about 57 crores, is going to be another 40,000 tons. That's the kind of capacity build up that is going to be there.
So 1.4 plus 20 plus another 20. Is that correct?
No, 40.
40
plus 40.
20 plus
so
40 and utilizable, as I call it. This is the machine capacity. Utilizable is always about 80-85% of the installed machine capacity, like that.
Got it. Got it. Got it. Let's get Mr. Suri as well in. Mr. Suri, congratulations, rocking listing with these big returns. Responsibilities on even more on you now. So what is your vision for the company, say in the next 5 years from here on? Because on a quarterly basis, we'll be interacting more often and we are going to be trying to see what is your vision. But on the listing date, 5 years from here on, where do you see the company headed? As of the last year, we have numbers. You're doing high single-digit margins, revenues of around 1,300 crores. And the last time you all joined us, you said that probably the peak capacity in the next 2 years will be 2,200 crores. But give us a 5-year roadmap that you've planned.
Well, not discussing the financial roadmap, but my vision, already we are currently in pre-engineered buildings, but we are more and more moving towards placing ourselves as a engineering company. We excel in engineering. We have a great engineering setup, and we want to, I see the company moving into more complex engineering projects, infrastructure projects, tall buildings. So my vision is to make Interarch a global player as an excellent engineering company doing heavy structures and complex structures for any kind of application. That is my vision over the next 5 years. And I see it happening because Interarch is well placed for that. I have built an excellent team. We have a great team. And I think Interarch will go places as a excellent, unique engineering company.
One final question from my end, gentlemen, and either of you guys are open to answering that. You know, one of your RHP points mentions that there is some vulnerability that you have when it comes to raw material prices as well. How are you managing that to adjust to fluctuations in raw material prices? If I'm correct, steel is your major raw material that you consume. So if at all there is a fluctuation in raw material prices, how do you manage your margins in case there is an impact on that as well?
Yeah, so good question. Thank you for asking that. So we have a model, what we call for our longer duration contract, which in our case is about 9 months to 1 year, is what we call the variable price contract, where steel price increase or decrease is a pass through, because we believe that we are an engineering company. We are a pre-engineered steel building company, not really speculating on the raw materials. So therefore, for all our variable contracts, which form something like 40-50% of our order book, generally are steel pass through. So the fluctuations don't really hit us. They are passed on to the customer either northwards or southwards. And rest of the orders, which are fixed price contracts, are protected by holding inventories, which we hold about 2 months, and then the steel cycle, which we use special steel, is about 2 months. So that way we are reasonably protected against any up or down in the steel prices, because we don't wish to speculate on steel. That's not what our business is.
Okay.
And there is no major variation in steel prices, except 1 or 2 hiccups happened in the past.
Got it. So most of it you all are protected. Just to squeeze out one more number, revenue aspiration is what we got. Margins in the vicinity of around 8.5 to 9.5% is what you have done, and you believe that you can maintain it at that. So we'll hold it at high single digits out there. And you also mentioned at the start of the interview, you're sitting on a big order book. We have the number for what's given in your in your DRHP, but we would like to know what is the updated number as well. What's it right now?
So updated number is about 15% more than what it was at the time of printing the prospectus or RHP.
All right. So that would be in the vicinity of close to around 1,300 crores odd, at least.
That is correct. Yeah.
It's a pleasure speaking to you all, gentlemen. We wish you all well. Appreciate you joining in, giving us a sense about how do you all see business shaping up. Celebrate the day and look forward to chatting up with you all in the time to come.
Thank you. Thank you, sir.
All right.
Thank you.
All right. Well,